up late, charts on fire, red and green like a funeral pyre. Discord screaming LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump I won't forget. Buy high, die huddling. The 10 brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shady clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win, even if I lose it all again. Buy high, die huddling. Gas fees burn, but I keep rolling. Almost gone, greed's the king. This crypto dream's a punk rock thing. In the glass, risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die huddling. Gas fees burn, but I keep rolling. If I crash, at least I tried. In this wild west of blockchain rise. I'll be trading till the lights go out. Charts are noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. But I'll reload, I play to win, even if I lose it all again. Woke up late, charts on fire, red and green like a funeral pyre. Discord screaming LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump I won't forget. Buy high, die huddling. The 10 brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shady clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win, even if I lose it all again. Buy high, die huddling. Gas fees burn, but I keep rolling. Almost gone, greed's the king. This crypto dream's a punk rock thing. In the glass, risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die huddling. Gas fees burn, but If I crash, at least I tried. In this wild west of blockchain rights. I'll be trading till the lights go out. Charts are noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. But I will load, I play to win, even if I lose it all up.
What's up, guys? Sorry about the wait there. Just getting the giveaway system already. All right, what a drop. I hope you guys are okay from all that. I'm gonna go through some macro analytics. I'm gonna go through a trade that I actually just recently lost today too. And yeah, we'll go there and what I'm preparing for today. But yeah, let's take a look at the chat, see who's all here. We got Coma, of course, always here first. Sterling, what's up, bro? We got Alvin. We got Crypto. What's up, Trading Bros? Colin, how you doing, man? Noah, Trip, Tube, Freebreaker. Yo, crew, buy the blood baby. yeah. There might be a calling for a final Wyckoff spring. Yeah, that'll be interesting. Even wrecked gambling. Yeah, you don't gamble, bro. So we got Jay Becker. What's up, man? Wendy, more timer. All right, let's get to it. So we've hit some macro key levels that suggest that this is one of the best opportunities to buy Bitcoin, not to enter along, but to accumulate right now. We spoke about a little bit throughout the week, actually, preparing for the supply to be held at a 50% loss. So, sorry, but if 50% of the supply is being held at a loss, it's a huge macro buy indicator. And there's a lot of other confluences as well. Do I think that the bottom is in? Not yet. I still think that we could stay inside of this previous 250-day range. We just mitigated supply, though. So I want to see if we get above this value high and consolidate for potential continuations. But right now, I'm not convinced that this is the bottom. And I'll go over why in a moment. But yeah, I want to quickly go over a short that I did because I was anticipating for us to start to go down here during this moment. We had a lot of confluence of this supply zone here, meeting this as an area of interest to prepare for potential shorts. We did just fully mitigate it like 6 minutes ago. But yeah, so we had this uptrending momentum. I had a bearish change of character. We had a bearish divergence. We have deviated very far from the VWAP, and the VWAP tends to act like a magnet to bring price in. The volatility has been absolutely insane. We have on the 3-minute time frame like $2,300 gaps between breaks of structure, between external breaks of structure at least, and then we had this volatile V-shaped recovery here from 59,900 before we had a change of character on the 3-minute for like 8% move, $5,900, like $4,900. And now what I was preparing for next was a potential short here, but it hasn't been validated yet. I wanted to see a sweep of this liquidity here and a break of the low. And now that we deviated a little further away, I'm going to have to probably wait for a better structure. But yeah, our orb got printed here with a momentum-based candle in the 15-minute time frame, showing some strength in buyers. But if we take this low on the 15, I'll be preparing for a retracement back down. I might be targeting the VWAP and then the point of control. And then we'll see if we get continuations from there down to the value low. But this would be like TP1 kind of scenario, TP2, maybe even your full exit plan between these 2 points. And then looking at the value area low next. I want to zoom out on a chart that I created back in like 2020. This chart here, I call it the golden accumulation chart because I draw this like golden box whenever we start breaking certain EMAs for accumulation. And you can see like how they're zoned based on the break of the 200 weekly EMA. So when we break down below it, throughout history, it has given us the best buying opportunities for Bitcoin. And in confluence with this, we tend to meet a lot of on-chain rules suggesting the bottom is in as well. But I do think that we are due to come back down a little bit and hopefully build some structure, because our daily structure before we determine a daily bullish change of character is like 64% above us from the low. It's just stupid. I thought our positioning before was awkward, but now it's even more bizarre. So we would need to have some more longer term structure to define like a lower point to define like a reversal level, just like we had down here in our last bear market bottom. But yeah, here, what I'm looking for is hopefully some consolidation inside this 250-day previous value area, and then to find some better key levels for a macro reversal. But the cycle has been unique for sure. But yeah, I want to talk about this chart a little bit. So this chart is one that I use to help track. So each one of these bars represents a passing year. These golden bars is a passing year. And the green bars is halving events. So when the miners create supply at half the pace, it normally induces stronger demand. And then we use it as a tool to provide us evidence of when price action is likely going to go up. There's a little bit more to it than that, but I don't want to bore you guys with stuff that you might already know. But yeah, so this chart is basically what I use once in a blue moon, and when we break that 200 weekly EMA, and when we see there's this oscillator down below called the Powell top and bottom indicator. When we see it reach the bottom blue level, we see this green bar pop up representing a buy opportunity, and we are so awkwardly close to tapping it. And confluence with being at the 200 weekly EMA, this orange line here is the 300 weekly EMA. We tend to get squeezed between it and then get a reversal. Last cycle was a little bit unique. We did have a few scenarios that made things seem like it was the end of crypto for a lot of people. I know a lot of the members were, listening to me kind of laugh about it and try and prepare for a buy opportunity. But yeah, when we get below this, it's insane, and you prepare for your macro breaks. Like what we were looking for was that double bottom break, and we front ran it on lower time frames for this big move up. We're not sure what this structure is going to look like yet if we stay down here, but when we have that evidence, I will be able to give you guys like an hour by hour countdown of when we're going to have a reversal. And like right now, we don't have that posture to give us that kind of evidence, because otherwise we'd have to wait for a break of this high way up here at like around 98K based on our current structure. So it's a little bit ugly. But yeah, so we're in that zone of accumulation. So if you were to, not financial advice, but if you were to be buying Bitcoin for a long-term hold, like for a year plus hold, like this is the time where you would start thinking about accumulation for Bitcoin. And then very shortly afterwards, altcoins as well. Bitcoin's kind of the dictator of how well the altcoins will perform based on pairing liquidity. So when we have that confirmation for Bitcoin, you'd want to start looking at alts with healthy utility. I'm not suggesting you to go around buying meme coins or anything like that, but if you're looking for assets that you think that will be around 10 years from now, and even if you're only going to be holding it for a year or two, or even just like 3 or 4 months, you want to have the mindset that Warren Buffett has when it comes to accumulating assets. Is like, is this something that would be worth holding for 10 years? Or would you be willing to hold this for 10 years? And if you're not willing to hold it for 10 years, you shouldn't hold it for 10 minutes, right? And so, yeah, basically looking for evidence of a reversal And there's a lot of evidence right now on chain that this is going to be, the bottom's going to be coming in. And there's a lot of evidence in terms of confluences that the bottom is coming in right now. Now, with on-chain evidence, I want to talk about the supply and profit loss. We tapped that green box zone. It doesn't show it on this chart, but we did hit it because right now it's showing us that the supply was at 50.311% of the supply was being held at a profit at the price tag of 62,800, right? And we went below that. So the glass node's only updating us from 62,800, and we dropped down to as low as 59,900 area. So we had a brief moment where a majority of the supply was being held at a loss. And that's a huge bottoming signal, but it doesn't mean we're quick to return back up, right? We're currently got acceptance during this moment into a 250-day value area. And when we get acceptance into a macro value area like that, we tend to behave similarly to how we were in the past when we're in that area, right? So if we get trapped in here, we could actually be stuck in here for a few months before having our reversal. So I do think that we could actually properly tap this value area low and maybe even the legacy support level. And if you don't know what the legacy support level is, it's a level that's been holding up Bitcoin since like June or July of 2017. I've got it on one of my charts right here. This is my OG chart. So if we zoom out on the Bitstamp chart, you won't be able to find this on I don't think any other chart. And if you can, let me know, because I'm kind of like looking for other data that kind of helps support some stuff. But Bitstamp has the entire history of Bitcoin on here, right? So you can do analysis on historical behavior using the Bitstamp chart, kind of like that chart I just showed you here. This is the Bitstamp chart too, but on the 5-day, right? So I'm able to zoom out and create this arced trend line to kind of give us a pace of the conditions of Bitcoin's growth. So Bitstamp's really helpful for macro analytics, but it's not very helpful for short-term trading. So I wouldn't recommend using it for that, because sometimes you get gaps in the candles or confirmations are kind of off. But the great thing about it is just it has Bitcoin's history on it. Going back to that legacy support level, you guys can screenshot this if you want. This is the coordinates of the trend line. You cannot give it any wiggle room. Once you have this on your chart, there's no really up or down movement you can do based on the connection points that we have on it. But if you want to screenshot this, what you can do, think of coordinates as a tool of passing notes between traders. You could basically just get their price bar levels, and then it would automatically draw that trend line on your chart for you, right? You can just put a trend line anywhere like this, and then you just type in the coordinates, and then it'll align it to the coordinates that you have typed in. Right, so this is the legacy support line right here. It's been holding us up since July 2017. We had that aggressive move down below, but we closed back above it during COVID. We had our double bottom effect off of it when we had a falling wedge squeeze from the last bear market. And now we're close to tapping it with confluence of this previous valley area low. And what you want to do is get a vertical line like this when you're trying to identify like certain price points, right, on the daily candle, and just find out where that crossing point is, right? And then that tells you where it's at on that day. So right now, today, it's at 55,687. Tomorrow, it'll be at a different price because this is a ascending key level of support. So think of this as like the macro buyer's momentum, right? We look at the lower time frame stuff, and the larger time frame stuff behaves the same way. We tend to find massive buy walls in the order books on these trend lines to help you kind of think of it like a tool for guidance for buyers, and they tend to like try to front run it a little bit, but they will have a the greedier ones will have a trend, their order books like align right with that trend line, and they even can automatically set up so that each passing day it'll change their order, right? So just be aware that we're super close to legacy support, and it tends to give us the best buying opportunities in history for Bitcoin when we get to it. So if you do decide to buy, let's say today, just be aware that you're buying at the risk that we could go down a little bit lower first before potentially going back up, right? So I'm not convinced that this is the bottom. In terms of market structure, we definitely have not confirmed it. And unfortunately, we are in an awkward scenario when it comes to the daily market structure. And if we look at this, this was the previous high that we were monitoring before at 107 as our key level, hoping that this would break and define a reversal back to all-time highs, right? And this in itself was a supply concern, and it helped induce this reversal and broke this unclaimed low. And when we broke that unclaimed low, we rotated that key low from here all the way down to here. So now 98K is our key level. And we didn't have any proper pullback other than internally right here during this whole drop. So now market structure has gotten super awkward for us. So we need to have like a 2 candle pullback on the daily, another lower low, and hopefully we have a lower defining key level to define when the daily market structure suggests that this is the bottom, right? You would like to have market structure on your side when you're trying to confirm the bottom, just so you can make sure you're accumulating at a position of strength, right? Buying now means that you might not be jumping in on a position of strength. If anyone caught this knife, you are basically Jackie Chan, and I congratulate you on your gains. Like that was a pretty intense the V-shaped recovery in the lower time frames. But this is far from an engulfing candle. Like we had a this daily candle dropped like $10,700. For us to recover that and engulf, it would be pretty wild. An engulfing response would be bullish. Doesn't mean we can't retrace some of it, but yeah, I'm suspecting that we should be coming to a halt very soon, based on previous Valley area data and based on our local price action. So right now our key level just rotated a little bit here. We have a proper pullback here. So if we take this low at 67,679, sorry, yeah, 67,679, then we'd confirm a reversal. We just tapped the 250-day Valley area high. We just mitigated this entire supply here, and we just tapped this previous low with this wick level. So we have a lot of confluence on our side, preparing for the drop. And I did try to front run it with the confluences here that we had. We had downtrending momentum, bearish divergence. We had bearish change of character in the lower time frames, and we lost momentum. And I readjusted the momentum since, but I had it flush right to the bodies. So it felt like it was the top, especially since we were already in supply at that time too. So we'll see how we perform here. If you're wanting in on it to come back down, then what you don't want to see have happen is us to consolidate here and then get a continuation posture like a bull pennant, for example, and then another break of structure for a continuation. We'd break the downtrending momentum that's been holding us down since 78K, arguably even higher. Yeah. So we could start seeing buyers like come back up, maybe test April 7th low and return back down from there and consolidate against the Valley area high as a form of support. But I'm more of the confluences are on our side for a drop right now. So I'm just preparing for a return down. And this is our previous key level. So now I'm going to rotate it to here. Go the 5 minute. It's just a bit of a waiting game right now. We have orb confluence too. We'll get acceptance back inside the orb. Maybe we even take this high and then come down from here. Didn't have a proper pullback during that drop, but we have flip break and then bearish change of character. Let's see what we got in the chat. How have you guys been doing? Coma saying that there's a solid buy wall at 65,100. Yeah, people want that price again. Let's see. 30-minute SFP confirmed. Let's take a look, man. Yeah, right, yeah. So the invalidation point for this 30-minute SFP would be that wick level high. There is a way you could increase your win rate on that by using fibs. Right, so pulling from the wick level high to the body. If there's two things actually here I can teach you guys. So here we can talk about the fact that you can prepare for what's called a lick wick, where if you're pulling from the high of the wick to the body, you have like your golden pocket 786 zone. And then what you do is you look at lower time frame structure to define a reversal within that area. And then you use this level as your stop loss guard. The other suggestion too, when you're doing looking for a stop loss with your SFP, is you can calibrate it based on 50% deviation. So if you have your stop loss here, you can increase your win rate, but it hurts your R&R. You can increase your win rate by putting your stop loss here rather than right on the wick. So you can prepare yourself from, you can protect yourself from double sweeps before returning down, which are super common on assets like Ethereum. I think Ethereum loves to do that kind of stuff. They staircase like 3 times before getting a reversal. So here, if you want this, you just go to your settings, style. You want 0, 1, and 1.5 labeled. And the 1.5 represents a 50% deviation from the, the measurement of the 0 and 1. A really cool tip. But yeah, you did have that 30-minute SFP, but I'm still waiting for structure. Like I would really want to have a bearish change of character before jumping in on something. A break of this low on the 15 would be great. Because we would, keep that. We know that we would have the acceptance staying within the valley area. And there's a lot of buyers stepping in right now. So yeah, don't want to fight against this. Even though like the macro trend's on our side, the lower time frame trend is just so powerful right now. Like with the 2,300 plus like boss gaps is just insane on like lower time frames. Probably breaking records right now for Bitcoin. So it's good to wait for that confirmation and not just jump in. So you guys, yeah, 69% of you guys think that the bottom is not in as well, eh? New Earth Guardian, thanks, man. Andrew, how you doing, bro? How's the Hobbit? 0.5 second video delay. I think that's common. Yeah, we have actually that's pretty good. Usually it's a little bit longer than that. I think we're all caught up in the chat. Let's go through some assets here, guys, and see how they're doing. And then we can do the giveaway if you'd like. Let's do 3 assets and then a giveaway. Him and Alex Crypto are really great guys. Yeah, Alex Crypto is awesome. He's a good Fibonacci trader. He uses order block confluence, fib levels. He uses the fibs the same way I do, where like the 786 and the golden pocket are like his zoned levels of interest. Just make sure you're trading on the right side of the trend, and you're good to go. All right, cool. All right, let's go through some assets. Let's go through Ethereum. Ethereum's been a little bit wishy-washy. So we talked about Ethereum yesterday, and some key levels that we could prepare for reversal off of. We did deviate a little bit below the key level that we were watching, this box zone right here. We dropped about, like $40 below our zone. Then we had a bullish change of character. And then that's when we started going wishy-washy. And what I mean by that is like bullish change of character, bearish change of character, bullish change of character. It's like pick a fucking direction. And now we kind of have the same kind of structural confluence as Bitcoin, right? Where we're at a supply zone. The difference is Bitcoin has some relative strength right now because Bitcoin's positioning right now is right about here against Ethereum, where it still hasn't mitigated this supply risk. We have a wick level that you could watch out for. We're currently trying to confirm an SFP, but with this SFP, what I don't trust it right now, what I don't like about it is that the body candle closed back above the previous bodies. And that's a form of price acceptance that kind of opposes against the idea that we could drop, right? What you prefer with an SFP sometimes is the body to close back below the previous bodies within the time frame that you're watching. So just be aware that these come with lower win rates. So just be cautious. You can obviously take it if all your rules are met, but I just want to let you guys know about that with SFPs. So the body candle closes are also very important. What I'd like to see for good confluence for Ethereum for potential short, we are getting squeezed between this buyer's momentum and this more macro downtrending momentum here. So we're reaching an apex point. So what you could do is you go to your triangle section here and you can draw a triangle. This helps with psychology, right? Where you can just prepare. This is where you're gonna be looking for shorts as we enter the zone. You could even go as far as like something like this, right? So long as all your positioning and your structural rules are met. We got bearish divergence coming in. So we could sweep this high, tap this downtrending momentum first, then start to come down. And if you will be super cautious, you can wait currently, based on our current price action structure, a break of this low to get us a bearish change of character. And by the time we get a close below that, you'd lose momentum and you can start targeting our local demand zone again, which I recommend adjusting actually. Let's zoom out. See why we have this drawn. We have it drawn because of this demand zone, right? So I guess we could have boxed it a little bit better, but I think we refined it down to an order block. So I guess it did hold this whole demand zone. It just now we mitigated it. So we treat it like it's a plate of armor and that we just slash the sword right through it. So the armor's a lot weaker. Doesn't mean it won't hold, but the armor's a lot weaker. And if we close below it, it'll be easier for Ethereum to drop towards its next area of interest right here. So if I zoom in to the 30-minute, we saw a 30-minute order block. We can then use our information that we have from that to box a zone. Right here. And oops, my bad. And I know there's redundancy of me boxing these zones, by the way. I think that every single time I draw these boxes, when I have an indicator that shows me these. But just because I have the indicator doesn't mean that you guys do. So if you're using my chart links, because I know some of you guys do, you're not going to be able to see the order blocks created. Unless you are able to identify them yourselves without an indicator, then that's even better, right? And if you want to learn how to identify them yourself, we do have a course on it, but it's pretty simple. You basically want to look for like a doji kind of reaction. This is like the more traditional way of finding them. And then an engulfing candle beyond the high. And then from the top and the bottom of the wick, that's your order block, right? They come in different shapes and forms, but you want to look for kind of like a form of indecision on the left side and then decision on the right side, right? So we have one here, and you can see one's a really traditional one right there. They're all over the place. And the larger the time frame, the stronger they are, because it requires more money to create them. And order blocks are like an indication of potential residual buy orders, right? And if they're above us, then they're a sign of residual sell orders. And if they're in areas of confluence like a supply zone, then you listen to them a heck of a lot more. Or you could also use confluences like Fibonacci, pulling from the low to the high. And make sure you have your settings set up properly, right? And there we go. And we can see right now with this order block, we would have, if this was the high, which we have not established yet. So you cannot trust this fib pull yet. But if this was the established high, then we'd have the confluence of the golden pocket being at the ceiling of the order block and the 786 being internally within it, close to its equilibrium point, which is the 50% level of an order block, which is one of the common areas for you to see a bounce when we go inside of an order block. We can either just tap them or we can go within them, but the equilibrium point tends to be the zone where we kind of halt before coming back up. And if we do go inside of an order block, you want to look for market structural evidence of support too, with like a bullish change of character. So this would be an area of interest right now to prepare for with Ethereum. If you're looking for a return back down, this would be a good area to watch out for longs again. And that starts at 1,830 and ends at 1,741. And if we come down to 1,741, you do have a good SFP opportunity as well. So we can sweep the low and close back above the wick. And you can look at the most recent proper pullback. So let's say we do break down here, bounce off the VWAP, come down, and then we have a pullback here, and we sweep the low and close back inside the range, then you'd be targeting that most recent pullback. In hopes that it breaks, gives you a change of character to extend your target, but that would always be your TP1 when you're taking an SFP trade. All right, so Bitcoin's relative positioning right now is kind of like pulling Ethereum up, but now Bitcoin's currently in its supply, and Ethereum is now kind of in conflict with that positioning, is just coming up to potentially sweep this high, and we'll see if we get that bearish break. I would recommend maybe watching the 15-minute time frame for that confirmation if you were looking for a change of character. This would be the area you'd watch the most right here, and then you'd use the strong high as your stop loss guard, and you target the order block, and then being on the way down, you'd have to be mindful of opposing confluences. One being the fact that we have an order blocks here aligned with the VWAP, right? So buyers could be waiting here to induce a bounce. And then the 30-minute order block that we have here as well. So those are the little bosses that you have to watch out for. I would set pre-alarms near those areas so you can watch to see if there's an opposing reaction that would tell you to get out, like an opposing bullish change of character going against you. And if you have those bullish changes of character going against you, it's good to just take profits and get out and then look for the next setup. And if you don't have any of that opposing structure and you have continuation structure instead, then awesome, you can have your target hit and then get out of your trade with full gains. It's good to have your primary exit plan, but it's always best to know what your barriers are when you're doing your trades. So if you're not holding a trade for it just to come back against you, it's better to have the smaller gains than have no gains at all. So just learning your opposing barriers is really important. Okay, so right now Ethereum has confirmed the SFP, but like I said, I don't like how it closed. It does suggest a target of coming to this area at least. What other assets would you guys like to look at? I'm just going to look at some of the chat messages here. XRP, you can definitely do that. What's up, Mark? How you doing, man? Kyle wants to you want me to look at gold, silver, and XRP. Okay. Oh, thanks for the listing there. Quick question. If a higher time frame fair value gap is mitigated only by wicks, how often does price return to fully fulfill? Or is a wick mitigation generally enough? A wick mitigation is generally enough. So fair value gaps are created by basically a form of price inefficiency, right? If you were to visualize it, it's much easier to understand fair value gaps and how they impact the market when you have a really good understanding of what they do to the order books. The order book should be one of the first things that people learn about is like it shows you what the live orders are doing in terms of limit orders, like where people are preparing to enter the market or exit the market. And fair value gaps create clearance in the order books. So when let's look at this we have quite a bit of fair value gaps from these crazy moves. But yeah, when you get a close within a fair value gap, there's one right here. Let's say we closed within that, we tend to return to the opposite side, but we prepare for a bounce on the opposite side because the clearance in the order books that usually occurs comes to a halt up until this point. What the best thing about the order books are, though, is they will show you evidence of that, right? So if there's no orders for buyers in this zone until the floor of the fair value gap, this is where you're going to, then you will just go right through it, right? But the order books, if there are buyers here, then we tend to get that bounce. So time essentially will slowly invalidate the efficiency of using fair value gaps for confluence. Fair value gaps also show you a form of interest. So you can understand based on using volume profiles like I do, where fair value gaps might occur because of the alteration of points of interest. So let me just explain that a little bit better here. So over here, will give you a good understanding of where fair value gaps might be born. So when you pull a fixed range volume profile from the start of your range to the end of your active range, you might see these volume gaps right here. These are I call these valleys. If you were to visualize a marble, right, and you push the marble off the cliff, it will roll quickly until we get about here, right? And then price action kind of behaves that way too. And what you can do is you can kind of like box these zones. I would recommend having like a unique color if you're going to be boxing them. Let's make them white or something. In these zones, we tend to have the fastest price action. And this is where our main areas of interest are. So when you have order books showing you that there isn't any sellers until here, and then you buy into that volume shelf, past the volume shelf here, then you can understand that if there's no buyers up until this moment, we're likely going to create a fair value gap, right? So this gives you ideas of where fair value gaps will be born before they even happen, right? And where price action is going to move normally pretty quick. So fair value gaps kind of just tell you a story of where interest might occur within a single candle, whereas fixed range volume profiles will show you where interest might occur within an entire range. So they kind of talk to each other, if that makes sense. I hope that answers your question. But yeah, a wick, it will do though, when you have a wick come into a fair value gap, is it will induce liquidity usually above that wick. Like if there are sellers or buyers, if it's like a bullish candle, right? Then we had buyers come in and there might be liquidity pushed down to here, right? If you see, let's say we have a fair value gap right here. This is our active candle. And then we closed, if say this candle is coming straight down from right now and we had a wick, and the candle closed below here, this would reveal us that we had within the active candles like strong sell pressure, and there's likely liquidity resting right above that. So that liquidity will eventually likely be swept in the future, but you can't really treat it the same way you did before in the past when it comes to that fair value gap, because it's been fully mitigated just from a single tap, basically. And it adjusts the behavior of the asset changes at that point. And then, yeah, think of it like the fair value gap gets squeezed into a smaller zone of interest. We're breaking above this pretty harshly here. So we'll see. It doesn't mean we're not coming back down. The positioning will make it better for R&R though. So if we use, let's say we create a neckline here with like a double top or triple top or any kind of structure, and our key level rotates, we would have value area high confluence on a short. With the orb being in our face, you might want to wait until we get acceptance into it, and then we can start preparing for that more aggressive drop from there. If you're not in a long, you shouldn't be jumping into a new one. Unless you're accumulating spot, that's different. Futures wise though, your goal with the futures trade is just to capture paths, up or down, right? Whereas spot, you could buy now, and your goal is just to, you're thinking of it way more macro when you're buying spot. Thanks, Kyle. Clear explanation. Cool. Okay. Yeah, orb books are your best friend. They tell you the future. We need a Batman stream. Oh, bro. I've been asked that a few times already. My voice was thrashed doing that. You guys see it as a 2-minute and 30-second long video. I was doing it for like 4 hours. My throat was destroyed. Because it wasn't just like... It was one of the very few videos where I actually took more than one take, right? I normally, when I create a video, like a long form video, I just wing it, just talk about what I know, and then press record and then post it. But that video, it was like, I don't know, 16 hours of work for that 2-minute video. And if I were to be talking to you guys like Batman in a stream for like an hour and a half, I wouldn't be able to talk for a few days. All right, cool. Let's talk about XRP. We got Robert Wilson asking to look at it. And then we'll look at one last asset. And then we'll do a giveaway. And the giveaway will be 2 giveaways. We'll do 2 giveaways. One to Klein Funding for a $6,000 account. So you guys can trade with a $6,000 account. And then use you get to keep like, trying to remember, it's either 70% or 90% of the profits of the trades done on that account. I recommend transferring it to your exchange account, and then you can use that as a way to fund yourself if you're just getting into the space. I also recommend being patient. Like once you have the account, don't just rush into it. Make sure you're a profitable trader first. Paper trade your way into understanding your probability of success. Have your rules written down like a checklist. Right? You should be, your goal is to be as consistent as you possibly can and write down a list of rules that you're going to use to define when you're going to enter a trade, and you just follow those same rules over and over and over again so you have probability on your side, right? So there's no emotional inducement in your setups. And yeah, sometimes you'll see a trade that you're preparing for, like the one that we were looking at just now, like preparing for a short here, and then it starts to run up, and now you have to like depend on new structure to find a key level. It's just what it is. You have to be patient and wait for the setup to come to you, right? You can't just ape in whenever you want. So yeah, get your rules written down, and then you start using the Klein Funding account, and then you can actually utilize it properly, because there's drawdown rules with prop funding accounts. If you lose more than like 4% in a day, they take the account away from you. So you got to be consistent, right? So drawdown rules and stop loss risk management rules have to be in place when you use them. All right, cool. And then the other giveaway will be $100 to Karma. Karma's at a good spot right now. Let me just pull that up. Go on deck screener. So I'll buy some Karma for you guys and give it to you. We're at like it kind of fell alongside with BNB's pairing liquidity. It's paired alongside BNB. So when BNB drops, its liquidity kind of drops and makes it easier to drop. And when BNB pumps, it makes it easier for Karma to pump. Think of like liquidity, like the bank account for an asset. And that's why when Bitcoin goes up or goes down, everything else kind of goes up and down, because a lot of assets are paired with it, especially the older assets like AVAX and Ethereum, Cardano, and stuff like that. And then anything paired with those gets the on-chain impact. It's like a domino effect. So right now we're at a value area low for Karma. So accumulating it right now is a perfect time. And we just got a new team member to help with marketing, and we're gonna get this thing going. So yeah, we'll buy some karma, and it'll be a good thing for you guys to get for a giveaway today too. So I'm gonna buy you guys $100 worth, and the winner will get that airdrop to them. So here, let's go to that XRP. XRP, we had this box zone of interest. Our previous all-time high in terms of market cap was at $1.30. We kind of like breached below it. This is we had a demand zone here that we fully mitigated. And then this was our this is our last leg. Like we wanted this to hold. If this didn't hold for XRP, it was kind of doom and gloom. And we could fall down to like 94 cents, but it wasn't that strong. Because if we look at this interest here, we'd probably just come right down to these previous highs, all the way down at 70 cents if we lost it. So I'm very thankful for any XRP holders. I'm not one of them, but I'm glad that you guys are being held up by that demand. And we got a really strong recovery so far. We zoom in on the lower time frames. I don't know what that's there for. Looks like we're preparing for the retest of this before coming down. Which we're testing now. We're actually testing these previous lows, which is a form of bearish confluence. And zooming in. Our key level is super high. Let's see. We got, yeah, so our key level did evolve. So we can delete this. It's just in our face. So our key level was here that we were watching during the last live. Then price action kind of escalated to go down lower. Then we had this pullback here, right? And then we got the lower low. We got an SFP opportunity to front run the break of this key level. So this rotate from here to here, and this would have been the best buying opportunity here. And this kind of evolved into a potential supply risk. We have a bearish order block there. Not sure why it's not marked. But we only had a little bit of turbulence before confirming this momentum as a form of support, and then we ran up, and now we're at our next barrier. We have supply here and the previous lows here that we just spoke about. That's good confluence for potential shorts. So Bitcoin's positioning being at its value area high, and Ethereum's positioning, oh wow, we just mitigated that too. Ethereum's positioning was also at supply, but it just got mitigated. We have supply here, we got order block here. So we'll see what happens. Maybe we'll come up a little higher. We have a psychological key level that we just broke past during this moment. And the $2,000 price tag is like a psychological key level for Ethereum. So we'll see if we get a return back down from that. This is still our key level, but if we get a proper pullback and then a higher high, then our key level could rotate and change. Right now for XRP, when looking for drop, our key level on the 15 minutes way down here, because this is not a proper pullback. And we have, this will likely act as a form of demand based on our positioning right now. So aggressive return back up. Percentage wise, what is that? That's 40%, 38%. It's intense. So congrats to anyone who might have identified this change of character. And retest, break a structure if you're being super safe. Right, there's 2 safe opportunities right there. That would have helped you call the bottom. Catching the knife with an SFP, I understand that would be a little bit scary, but we had a good fair value gap above us. And when we had that SFP, once we get a close above this doji, and at least on the lower time frames, it helped drive the price back up. And then we got the change of character and rode our way to the moon pretty much. It's awesome moves. But these usually come with consequences. They would tend to reclaim a lot of those gains when we move up that violently. Let's do the giveaway, guys. Let's take a look at the chat. So you just gotta type in the word giveaway, and I'll have it listening for, we'll do 1 minute. So in order for you guys to type the word giveaway in the chat, you just gotta subscribe. For anyone who's not a subscriber, I really appreciate it. Help us grow. Our first goal is to get to 8,000 subscribers for this year. So yeah, that's right, Colin. Just type in the word giveaway, and then you'll get a chance to win the $6,000 account to Klein Funding, and then a chance to win $100 worth of karma tokens. Okay, but all right, cool. Bathman. H-bar. We'll look at H-bar too, Digger charts. Kind of interested in accumulating some of that myself. Kyle has the best demeanor in crypto. Well, thanks, man. Or Julian. And once that starts to slow down, then we'll pick our winners. While you guys are writing giveaway, let's do the TA on H-bar. H-bar, we have a chart for it. So I'm going to pull it up. Last time we looked at it was January 2nd. I'm wondering how it did from this. If we did see that it lost a really important key level before. Looks like the last time we were looking at, though, was a long. And we're looking for bottoming structure off of these two key levels. And looks like we got it on this second one. You know, yeah. So zooming out macro on H-bar. This is a huge area of interest down here. I could refine this a lot, but I have this just a large giant green box zone for basically if we're in this green box zone, you prepare to accumulate H-bar. I have a good feeling about H-bar like longer term, but it did get its butt kicked at its previous macro value area high, which was at like around 36 cents. It was a really good tool to help guide us into knowing when we were going to start going down. But yeah, the last time we were looking at it was January 1st, which was like this, or January 2nd, sorry, was this double bottom. And it looks like we were talking about finding a measurable target based on the momentum of the double bottom. So if there's a lot of volatility in a double bottom and that volatility sticks and we have a confirmation of the break, it gives you a guide into understanding where spot buyers might take profits, right? So here is your double bottom posture. You pull it's pretty simple. You find your support, right? Your 2 touch points, usually with a double bottom. And then you look for your highest point of resistance within that, which is called the neckline. So from here to here. And then you click and drag it from the high to that low. And then just put it right on top where the neckline is. And it gives you a measurable base target based on the continuation of that momentum, right? So we had our key level. This was it here. We wanted to have that break in order to have that target hit. I'm sorry for deleting that. Didn't mean to delete that. And that's when we started to hit our head. We had a ascending double top right here. And this was your warning sign to get out if you haven't already. Right, this was the topping signal. And then we had the Batman head and shoulders. If you guys want to learn about the Batman head and shoulders, we have a video on that. Community made me do it. So if you watch it and you're like, what the fuck, Kyle? The community made me do it. Then from there, we had this demand zone. So returning back down here, we were looking for this first to hold us support. We consolidated in it, but it doesn't look like we had. Yeah, we just ended up building like bear flag posture. We didn't have a bullish change of character. In order for us to have the bullish change of character, we need to have this low taken, then a higher high. Instead, we were kind of like trading internally between here and here. I guess here, sorry, here and here. And then we had that retest and lower low and just kind of flopped down from there. So we didn't have the bottoming posture that we kind of wanted here, but it got carried down like everything else did. So we can start deleting all this noise now. We don't need it anymore. So readapt some of our information. And our next key level, that if this was lost, was here. We had a previous value area high. This value area high's age. What is the age of this value area high? We came in it twice. Like we had this value area was about 536 days old. So it's pretty darn significant. So you just make sure you label that. And you can see like when we get to value areas, we tend to use them as support. And when we get acceptance into it, like this, we get that rotation to the value area low, while being mindful of the point of control. So what we do not want to see have happen with H bar is acceptance with a break of structure into the value area, because then we could fall down to 5 cents again, which would be pretty doom and gloom kind of stuff. I could see the scenario of us sweeping the October 10th crash right here. I wonder if we already did. If we did that, that'd be awesome. There we go. We did. Okay, cool. So then we have a macro SFP going on here. All right, sweet. So we got the SFP. The manageable target for a SFP is the most recent proper pullback. I would look to here is the technical target, but where we currently are, obviously we'll have some opposing confluences that can prevent us from hitting that target before coming back down and potentially stopping you out. But the invalidation point for the setup is the low. I wonder how low of a time frame you could have used. So you could have used the 8 hour, you could have used the 6 hour, you could have used the hourly. Yeah. So I think the hourly posture was pretty darn good. We got so remember we were talking about before where you want the body to close. It's back also inside the bodies, so you have that proper price acceptance to increase your probability of winning the trade. Some people just want it to like wick and then close as close as it can to the wick level, but you want to have more conviction in your setup, right? And then you have to worry about the price acceptance levels, the body levels, to act as a form of resistance if you got something like that. Because you're fighting for R&R depending on how the wick is generated. And like the steeper the wick, the worse the R&R. If you're going just for the hourly target, it was hit right here. The daily has not been confirmed yet, but if the daily confirms, then we can go way the heck up. Where were we on that? That was way up here at 10 cents. So like a 30% move price action wise, but R&R wise, yeah, you could 5x your risk if you took the hourly entry. That's intense. I'm not going to leave a long precision tool for a trade I didn't take, but opposing confluences that I'll be concerned about right now. We have fair value gaps galore. This is an unsustainable type pump. So seeing stuff like this, you kind of prepare for retracements, and you begin to look for those retracements at key areas of interest, opposing interest, like supply. When trying to identify supply, for anyone who's new here, you want to look for an impulse move down, base of structure, impulse move down, and that is supply risk. So when we get up there, you got to prepare for potential residual sell orders, or sellers just waiting to get out, or buyers that are trapped in those areas. And if we get reversal structure in the form of bearish change of character, then you close your profits, or at least partial, and then you can look for shorts. Okay, let's do the giveaway. I did some TA on H bar here. But yeah, if we're looking for an exit plan, if you jumped in on this, if you caught the knife here, or if you got on the SFP, this is a great spot to prepare to take profits, and also be mindful of these like recent highs. Like we're kind of fighting one right now. There could be liquidity resting above recent highs. That's why you watch them. So when we get to those areas, if there's liquidity here, it could be used as exit liquidity for people who are entering or exiting with large amounts of funds. So they look at these areas of interest to get out, right? So they have a lower amount of price impact and the lower amount of slippage in their setups. Because if you're trading with like $40 million, you have to depend on pooled liquidity areas, which tend to rest above or below valley areas or above or below extreme highs and extreme lows. And then this would be an area where liquidity could be resting. So just be careful. But this is a great area of interest, a little bit higher for potential shorts for H bar or exit plan for anyone who's in a long. If you just bought spot, then you just sit on your hands and wait. Yeah, there's a great buying opportunity. Okay. All right, guys, we're doing the giveaway now. This giveaway has your name on it? Well, I hope it does. Yeah, we're getting, yeah. I'm trying to find more opportunity. I got to partner with more companies and stuff like that so I can give you guys more giveaways every Friday. So we can do like maybe 5 or 6 giveaways every Friday instead of just 2. Type it 2x and you're automatically disqualified. No. If you type it twice, all it does is just enters you in once. It only listens for your name once. And then after that, it'll just stop going forward. Okay, so we're going to pick a winner. It's just waiting for participants. Why? Okay, well, one second, guys. We might have to redo that. And we'll just... I just gotta log back in. Control C. Reset. Sync from Discord. Oh, it's working now. Okay. Winner is a member. We got Claudio Friestas. I'm sorry if I said that wrong. It's going based on Discord handles, so this will be the winner to the $6,000 Klein funding account. I'm going to start the post, paste it on our announcement section here. Okay, congratulations. Next winner for $100 worth of karma. Bar Jack. Oh, cool. This guy's been a member for a long time. Congrats, man. All right, so we got our 2 winners. Congratulations, guys, on the win there. We'll have another giveaway every Friday, guys. So if you didn't win this time, don't worry. And remember, if you win once, you can't win again, right? So unless we decide to reset the system one day. So every time there's a winner, your odds of winning increases. Congrats, guys. Bitcoin still climbing up. Are any of those 2 in here? I don't think Baher Jack's in our chat, but where can one pick up some karma? The easiest way to buy karma is on PancakeSwap right now. Or listed on a couple of other exchanges, but PancakeSwap's got the most liquidity. If you go to karmatoken.org, like this. You can just click on the buy and it'll forward everything in for you and put the output currency for you. And you buy it there. It's decentralized only right now. If we do get a listing on a centralized exchange, we're just focusing on certain goals right now. We're only lacking one goal right now to get listed on CoinMarketCap. After speaking with them, they just want a little bit more volume. So I am contemplating on maybe getting us, once we get a little bit more liquidity from its protocol, I'm going to get it listed on, I'm thinking about Base or Solana network, so we can get lower fees, and then we can use that as an advantage to create an automated market maker. And if we have an automated market maker set up, then we can kind of induce more volume that way. But yeah, right now we're kind of just like letting people get in on the accumulation phase first, and then we have some pretty wild goals to get this thing going. There's a lot on the roadmap that you can read. In terms of like partnerships, we got 2 great partnerships coming in with a school that's going to be using the currency as and part of their system and acceptance for their clients. But we have a whole roadmap here and what we're planning on doing and what we're working towards. But yeah, lots of more information down here at the very bottom. The smart contract address is down here. You got PancakeSwap, TookPi. You can buy from PCS liquidity tools like CoinBrain and Livecoin too. It's young in terms of development, but it's been around for 3 years. Our all-time high is about 26 cents, and right now we're at 5 cents. And it's a passive income system. So every time there's a transaction on the network, based on your percentage of holdings of the supply, you earn more of those tokens. And it's done through a private integer, so you'll just see your balance increase. You don't have to connect your wallet to anything in order to receive the passive income either. You buy, you hold, and you earn more karma tokens over time. And what a lot of people do is they try to get to a supply goal. They just buy a certain amount, get to a goal. Let's say, for example, like 1,000 karma, and then as your balance grows past 1,000, they'll sell it and just earn passive income from that. And it doesn't hurt the price because the buy actually goes, a percentage of it goes towards the liquidity, and when people sell, that also contributes towards liquidity. So it increases the floor value of karma like permanently over time. So it's got like, I guess, pump tokenomics. So it just basically allows it to just keep going in an uptrend like longer term, similar to like Bitcoin, where its supply issuance decreases every single time there is a halving event. Yeah, and that then increases the demand against the newly formed supply issuance. And if you guys are interested in like tracking that supply issuance for like Bitcoin, it's pretty easy to track and monitor. But the main thing you want to watch is the halving event dates for when that occurs. It's really good confluence for knowing when we're about to have a big move up. This cycle has been kind of unique in terms of the timing for that, because it happened at like the all-time high, the previous all-time highs, which is just basically unheard of. Yeah, here, right? Normally it's a big spark for a move up, right? Like last cycle here on May 20th, or sorry, May 5th, was it May 5th or 4th? But yeah, in 2020, we had that big move up after we had a pennant against this massive downtrending momentum. But the squeeze event that we had occur here kind of made us rush towards liquidity, and the institutional involvement that came in as well, it made it the placement of the halving event kind of unique. Being at an all-time high kind of actually made it feel. That's why the super cycle theory came in place, because of the placement of the halving event in terms of positioning in the structure, and with institutional involvement coming in. It's not really out of the cards, like the whole idea of a super cycle, but this kind of behavior, it's almost like we're in like a shorter term bear market. It's kind of wild. Or a faster pace bear market. We come down to our bottoms, establish the bottom faster, and then come back up faster. And it's the sign of Bitcoin maturing. We'll see what happens if we get acceptance back inside this value area or not. Or if we're going to ride off it like a form of support. Okay. What's the market cap? The market cap's super young. It's below $1 million. It's right now it's only 338,000. We were at 700,000 at 16 cents. But now we're back down to like 338,000. Lost some whales here. This is a big area of interest here that we're watching out for because some people that bought here got trapped and those same people left. So my goal is to accumulate 5% of the supply myself around here. So if having me as a holder would be an asset to all holders because I won't sell. My goal with Karma is to buy that supply so I can then use it as a reward system for these giveaways. So then I can just give away the reflections and I don't have to like keep buying out of pocket to give out the rewards. So as the reflections land in my wallet, I can just issue out that based on the volume. And the goal is to get the volume to a certain point where people can actually earn like really good, reliable income. Right now, it's really slow-paced kind of income. But it happens every single transaction that occurs. So the more people that know about it, the more people earn on the system. Do you think that this is the bottom for BTC? I went through this in great detail already during the beginning of this live. Short answer is maybe. So we have to have I do think that we are likely going to come back down and retrace some of these gains. But whether or not we take this low or not is uncertain. We had the supply being held at less than 50%. 50%, less than 50% of the supply was being held at a profit during this moment. It was a huge buy indication. Doesn't mean we can't come back down here. But if we do come down to this low, I would like to see either the legacy support tapped or at least the value area low tapped at 58,950. So right now as we speak, we are building posture that will help define whether or not this could be the bottom. If we had consolidation here and we built a continuation structure and then get a break of structure, this could very well be the bottom. But if we instead get reversal structure, which I think is more likely, we just had a really aggressive pump. People are bound to take profits from stuff like this. We induce liquidity below us. And altcoin positioning is really aggressive right now. Like a lot of altcoins are really overheated. And they kind of, like the whole market kind of talks to each other in a sense where now that we have that positioning above value high, we're in the supply zone here. Like we have really good evidence to prepare for a short. But structurally right now, the only key level that we need, that we have to help us identify that this could be, that we could be coming back down to return to the bottom is this one right here on the 15-minute time frame, because the external time frames like the hourly, the 4-hour, the 6-hour, the daily, our key levels are super high up. So yeah, we need to have this bearish change of character, and then we can see if we'll come back down to the bottom or not. But we could get it here. We could get pullback, higher high, and then break the neckline with acceptance back inside the value area, acceptance back inside the orb, and then return down from there. And so all we're really lacking is structure here to define that. This is a good spot to prepare for continuations, and it's a good spot to prepare for reversals. So it's a coin toss moment right now until we get the actual structural evidence that will support that we're going to drop or not. But if you, yeah, either way, whether you think it's the bottom or not, all the on-chain evidence suggests that this is a good time to accumulate, like, to buy Bitcoin basically for a spot hold, not like a futures trade, but a spot buy. This is historically, whenever we get to the point where the supply, like 50% or more of the supply is being held at a loss, called the bottom every single time. It helped me call the bottom the last time, and it's going to help me call the bottom this time. And I've already said this before in the live, but if we can get daily posture at a point where I can give you guys a countdown timer of when we're going to go back up to all-time, maybe not all-time highs, but at least establish this as an amazing inverse perpetual long opportunity, then I'll give you guys that, just like the last time. You can look back in my YouTube lives around the last time we were here. It was around like 2023. Like I had like a 7-hour countdown timer for when this move was going to happen. And it was mainly because we had the posture to allow it. And right now we don't. We're at the point where all the rules are met for this to be the bottom, but we're just lacking the structure to define a key level that will tell us that this is the bottom, right? I can give you a hypothetical scenario how we could prepare for something like that. Like for example, like right now, this is our key level on the daily posture to define that this is the bottom, to break it. That's way too fucking high. That's way too high. We don't want to wait or lose 60% of the opportunity, right? Like that's insane. From the bottom to that, our break of structure or change of characters, 62% from the low. So what we want to have happen on the daily posture, or at least a 4-hour, a pullback, right, of 2 candles, and then a lower low. And then wherever the high is from that pullback, that becomes our key level that we need to have broken, and alongside all the on-chain data that's already been met to define this as the bottom. And then we can start preparing for an inducement of a large amount of traders jumping in and investors getting their confidence back and stuff like that. And these guys are right now are knife catchers. Whoever caught this are just here for the accumulation, the long-term long-term gains. But if you want to get in a position of strength, knowing that have a better chance of this being the bottom, you need that posture that I suggested first. And it could take, like if we drop here, it could take a long time, guys. It could take a month before we have that kind of structure. Or it could take 4 days. Depends on how volatile we are. And it's a really good supply confluence here. All right, guys, that's pretty much all I've got for you right now. So if we get, just to recap what I'm preparing for, I'm in bear mode right now, preparing for acceptance back inside this 250-day value area from the value area high. If we pull back, like 2 candles at least, take the high again, break the low, get that bearish change of character, lose uptrending buyers momentum, get acceptance back inside the orb. We have great confluence here for a short. And then we can start targeting. You first want to be mindful of the VWAP and see the alignment if there's any confluences like an order block, right? So this is going to be your main boss, right? We got to see that. That'll be your first fight. If we break below that, then our next boss is the 250-day previous point of control at 62,108. And then right around here, you might be forced out of your trade if you have an opposing change of character. But if we have continuations, then you can start targeting the extreme low, right? If we get that extreme low taken, that'll be great for the macro posture. We didn't have a proper pullback on the daily, but we can see what we have in the 4-hour. We definitely do have one on the 4-hour. So if we don't get a proper structure on the daily, then we could potentially use the 4-hour to help call a key level to define that this is the absolute bottom. But you definitely would want to have that low taken, because right now, in terms of 4-hour structure, it's way up here at 79,388. I would loathe a V-shaped recovery kind of situation like this. I wouldn't want anything like that. So I'm hopeful that we actually consolidate here longer. I'm a Bitcoin maxi. I don't like it being this low, right? Every $1,000 Bitcoin goes down, I lose $40,000 in unrealized gains, right? So I want it to go to the moon just like everyone else does. But I do want that posture to help maybe accumulate more, because you can use Bitcoin as collateral for like a big move up using coin margin or inverse perpetual. And I'd love to help everyone else get like a kind of dream scenario set up like that too. So I'm kind of hopeful that we do return down. As much as I would love for this thing to just keep going up, I want it to go down first to give us that good defining structure for a strong reversal and allow us to get into an amazing swing trade setup. So we're kind of asking for it to go down a little bit first before we can go back up. And it's really efficient, healthy price action for that kind of stuff too. All right, guys. You guys have yourself an amazing day. Your price alarm didn't trigger. $3 too low. Bro, that is rough. I'm sorry you went through that. I've had those scenarios with limit orders where like it was off by $1 or 50 cents and it didn't fill my order. Or it did hit my order, but I was at the end of the queue because I was set to post only. Make sure you have that turned off, especially during volatile moments like this. But yeah, man, I get it. I understand it. It's brutal. But there's always more opportunities, so don't put yourself in mental debt if you miss out an opportunity. There's always going to be another one. All right, guys. I'll see you guys in the next one. I'll be live again on Monday. Have yourself an amazing weekend. I'm expecting volume to potentially drop a little bit now that we're going into the weekend. But because of where we're at in terms of positioning, it's really kind of an unknown of what the volume might be like. We might still have fast-paced volume despite it going into the weekend. So the opportunities might still be there if you guys are weekend traders. All right, guys. You have a great day. Congrats to the winners on the giveaway, and I'll see you guys in the next one.